Okay, good morning. Let's get into some trade ideas. We're going to look at the stock market technical analysis, hopefully find some trade ideas that can make everyone some money. All right, guys, leave me a thumbs up as I go along if you find some value. Let's get right into it. I'm going to start off with PayPal today. All right, so PayPal, a couple things we got going on. The market, short term seems like it wants to rally a little bit, especially in some of these tech names, and PayPal's really been sold down pretty hard. So if you look at the daily, you'll see that PayPal from the highs all the way down to where it's at now, or really the lows, was down about 70%. So definitely a potential bottom, or at least ready for a bear market rally. So I look at the hourly here and I see bullish divergence on the hourly that's been building right here on both momentum indicators. See how the momentum's moving up, especially here on the PPO, while price continues to drift lower. And we've got a breakout right there on the hourly chart. So that's probably good for a rally, a bear market rally, at least to kick one off. I would look for, there's a lot of potential targets on PayPal. One thing is, if I go to I think it shows up on the weekly. If I look at the weekly, here's PayPal's bull trend coming off 2016. You can see all the reactions there. We've broken that trend, and we've actually started to go into a bear market, but it may want to rally back up into a backtest of that trend line. All right, and that's sitting right now about 129, 130 area. If I go to the daily, we also have this big gap right up here where PayPal had really bad earnings, and they were sold down pretty hard. So again, that's up there. Gap, we basically gap entry is about 150. Well, sorry, gap entry is right here at 140, and then we fill the gap pretty much at 155.71 up to 175. All right, so those are some levels to watch or potential targets. So far, I like the price action. I think we're probably going to get that buy signal. I'm seeing it right now, and so I'm long this thing. Okay, let's look at the triple Qs. So triple Qs, we are, seeing a little continuation on the rally from yesterday. Again, we have to look at these bullish divergences here on the daily. They're not, the RSI is confirmed. The PPO is not fully confirmed. To confirm that, what you'd want to see, let me zoom in here. You'd want to see this blue line cross bullish, get that bullish crossover. It's pointed up right now, so it looks like it's heading that direction. So we might want to pull these shorts. I'm just going to put that out there. And any more upside, I'm likely going to start easing out of my shorts and just wait for a better setup. Again, going back to the daily here, we're very profitable on this trade. So we entered the trade right here on January 4th. We definitely caught the largest correction, almost, basically almost a 20% drop in triple Qs. And that's definitely one of the largest corrections that we've had in a long time, in years, really. The bear flag played out yesterday. We did see, potential reversal candles in a lot of different sectors and stuff. So things to look for. I'm hesitant to cut it, but at the same time, we don't want to give back too much of our profit on this trade. So what I'm looking for, this 342 area, this was former, let me kind of clean this chart up. This was your former support right back here when we got that initial bounce, and it was about 342.80. I'd like to see that hold today as resistance. So we're above it now. The daily, if we get a daily close above there, then I'm not going to be really interested in going home over the weekend short. All right, so if this sells off and we get some sort of an intraday sell off, then we'll still look good. But 342 for me, it's about 342.50. I really like to see the market sell down and close the day around that level or below it. Okay, so that's what I'm looking for on that one. And if we get that, then I could see another leg lower all the way down to this 299 area on triple Qs. Again, we have bullish divergence, so we have a bullish setup. We have we have this big reversal candle that took place yesterday. We didn't, it wasn't a bullish engulfing candle, so not a complete reversal candle, but we're seeing some more follow through today. So that's all in all, it's definitely bullish. And so we'll have to look at that and potentially pull our shorts if we can't get that close where I'm looking for. Same with IWM. So IWM yesterday, you had that divergent low. You've got the bullish divergence. Looking at the PPO here, we've got, you know, we definitely have that bullish crossover right there. So definitely a bullish setup. All right. So it's not something I want to just stay short if this wants to rally. So again, we could rally. I'd be interested in reshorting this thing back up at 209. Again, that's big resistance right up there. So that's that big sideways trading range. And we were basically there for about a year. So if it wants to rally back up to resistance, then fine. We'll let it do that and we'll take a shot at shorting it, reshorting it right back there. All right. So that's kind of what I've got on those. Looking at, you know, again, I'm looking for some sell-off today, but if we don't get it and the day holds up, then I'm probably looking at cutting some of these short trades. All right, and again, this is why it's critical to enter the short trades at key levels, because most people, if I look at like the Qs, you know, nobody wants to short right up here when you're in a bull trend. Because here's the thing, I shorted there on January 4th. We had big negative divergence building for a while. It gave me an indication that it was time to short, but nobody wants to short there because you've got this big bullish trend right here. And, you know, most people say the trend is your friend. There's no reason to short. But then when the trend ends and they actually realize it, that's about the time that the market wants to do a rally against you. So typically I prefer to short when nobody wants to short. And when everybody wants to short, when we're just, you know, way down here, is when we look to probably start to, you know, look to get out of those. So, all right, so that's what I got on those. Here's oil. So oil's still selling down. It's not... You know, they're trying to hang on to it. You see here on the daily, we've had this kind of grinding higher, but they keep pushing it down each day, taking an attempt lower. So I think oil is going to start a correction. I mean, we've already broken the bull trend that it was in starting back in December of 2021. So there's your bull trend. We've got clear negative divergence right here. I've marked that out on both momentum indicators. And we broke trend. We have a sell signal. So in general... I'm looking to short oil. I'm playing it with this DVN. Now it's not, this hasn't worked yet. I took a half position short on it yesterday and I did jump the gun. So I just want to point that out. I don't, you know, I don't typically teach to enter a trade before you see the sell signal, but I see it in oil and I'm thinking I'm going to get it in this, but on this one, we have clear negative divergence. Momentum's just dropping lower, while we have a clear bull trend moving higher in price, looking for a sell signal or a break of that trend line, which is a nice impulsive breakdown sell candle of that trend line. We don't have it yet. So again, we could continue to grind higher and pop and make new divergent highs. That's completely possible. And that's why I took a relatively small starting position on this one. You know, I'm not going to let it go too far away from me, but if oil continues to push lower, then this thing should break here pretty soon. Okay, industrials, XLI. This is an industrial ETF. And basically, what I want to point out, what I'm seeing is we just recently broke down from its support level. So you have this support right here about 90, it's about 98, we'll call it. And, you know, you had some reactions here. We also have this level right up here above, which is, you have several reactions up there, which is about 99.60 or about 100. But what I'm seeing is we did break down in the last few days and we're back testing or rallying back up into that. So we're above this key level right here of 98, potentially going to run up to this, this $100 level, and we'll look for a rejection up there. Not saying that we're going to get it, but, you know, we might. And if they recover it, then that was just a false breakdown or a bear trap. This one, you know, if you notice, had negative divergence really right here. So that's where you started to build it. This was a divergent high right there. And we've been selling off ever since. So that's what we got to watch for. I mean, ultimately, I would look for that rejection up here and for more selling, but it's likely going to come if tech and everything else starts selling down as well. So we'll keep an eye on this one. Wheat. Okay, we're seeing a pretty much a rejection off of the move yesterday. So basically, what I'm seeing across the board is we we were reversing a lot of those moves that took place yesterday. So I own in a separate account a bunch of foreign stocks, and those were down pretty big yesterday. Today, they're all up really big and pretty much exactly where they were at yesterday. So I'm seeing a complete reversal in that price action. And then also here in wheat, you'll see here, this is based on the Ukraine thing, but they ramped it way up, and today gapping down and selling down 8%. That's a good size move. Again, that's why I talked about wheat looks bullish to me, but I don't want to buy it here on this big breakout ramp up news. That's kind of a FOMO trade. Rather, what I do is rolling out, wait for wheat to come down to its bull market support line right in here. And this is where I want to buy wheat at. So some more downside there in wheat, and we could look at potentially buying it at support. All right, gold. So gold's selling down a little bit more today. Again, looks like it wants to come in and do a back test of that trend line. We still have a breakout in gold. So bigger picture, I'm still looking for more upside. But here's the breakout right here. It took place. We ramped up all the way up to that 1970 area, and now it's coming in and selling down. So it looks to me like it wants to come in and do a back test of this trend line. I'll be a buyer down there at that support line and we should hold and then rally off of that, and off we go to the upside. So more downside in gold. The miners kind of hanging in there. They're, some are down, some are up. And gold's got a little more ways to go to the downside, but we're looking to be a buyer on this dip at the end of the day. Again, gold looks bullish to me. We do have a breakout to the upside of this big pattern, so we're looking to buy on dips. Let's do a quick run through the fangs and then we'll wrap up. All right, so Amazon rallying. All right, looks like it wants to run up and do a back test of this major trend line up here at 3145. All right, so that's resistance right up here. So far, it looks like it's heading back up there. That's all I see on that one. Google, rallying, probably going to run up to the 200-day moving average and resistance right up here, anywhere from 2742 up to about 2763. Looks like it wants to, just rally short term. Facebook, got to look at Facebook a little closer. So Facebook has bullish divergence here on the hourly. So you'll see here on the momentum, let me mark it out here, bullish divergence there. On both the RSI and the PPO, we have a downtrend line to watch, which is right about here. Mark it out right about there. And we're pretty much right at it. So we'll see what Facebook wants to do. Maybe it wants to break out and actually have a decent rally. There is potential there on Facebook. Facebook's since sold down pretty hard, so to see a rally would make sense in Facebook. Microsoft rallying into the 200-day moving average, likely going to get stopped here. Could go up to this 305, but I suspect it'll probably get stopped right in this area. And Apple, on Apple, I've got this bearish rising wedge. All right, so it's right about there and there, okay? And basically, you can see we're rallying. We bounced off the 200-day yesterday. That's what we hit. So that makes sense. You hit the 200-day, the buyers step in, especially on Apple. And now we're rallying into resistance, which I see right now at about 166.70. We're probably going to get stopped right in there. So again, this rally might last for another day, or maybe it'll end today in the tech stocks. And then I do think they're probably going to roll over again. But again, I talked about the levels and what I want to see in the triple Qs. We'll see if we get that. And that's all I have for right now, guys. So I'll get a video out, let you guys watch through it. Let me know if you guys see anything you want me to look at, and I'll catch you on the next one. Bye.